Good morning and happy Tuesday. Welcome to Rick Helps Real Estate live stream, where we look at the numbers in and around Arizona, see if we can make sense of what's going on. Jeff Bezos launched himself and 3 other people with him into space this morning. One of them was an 82-year-old female aviator named Wally. I found that interesting. I hope somebody launches me into space and I'm 82. And the youngest to ever travel in space, an 18-year-old, who oddly got to go in because somebody else had a scheduling conflict, so his dad bought him a ticket. It's like, hey, so what are you doing Tuesday? Want to go to space? So lucky kid. Wow. So, but the sad part is they were only up there for 11 minutes. That's not enough time to float around up there. I think I'd want to be up there a little bit longer. So, got some numbers today. Let's look at these and see what they say here. This morning we have 6,413 listings on the market. We had 4,178 come on the market on 7-day moving average, with 3,790 go under contract. That's a difference of 308 units. Been pretty consistent. Having 6,400 on a Tuesday is it's another high. Let me show you what it looks like on the 7-day moving average chart. The blue line meaning new listings coming up, and the yellow line meaning homes under contract. You can see that listings are again outpacing homes under contract. The red line I put in here shows where we're at today and compares where homes under contract were tracking the rest of the year. This is Thanksgiving, Christmas, Memorial Day, 4th of July. The holidays do have an impact. So there is definitely a rise in listings and a slowdown in contracts. And we're going to dive a little deep into that today, because it's getting very interesting, and there's a lot of guessing on where things are going to end up, and there is some hope for buyers out there. So I think you might be encouraged. Do I have audio going here? Yes, I do. I was looking at the wrong button there. I didn't think anybody could hear me. So the rates today, interest rates today are 2.89 versus yesterday 2.97. We didn't think rates would get down below 3 again. We just thought that party was over. But the bond market's rallying. The stock market zipped down about 900 points yesterday, and people fled to the safety of the bond market, and that drives rates down. So rates are looking good. Refinancing starting to kind of fire up a little bit again, and people are still out there shopping, but not as strong. So let's take a look at some of the numbers we see. I wanted to address something that was brought up this morning by a gentleman in a comment that he had. Me talking about institutional investors scooping up some of the lower priced homes and making them into rentals. Well, how big of an impact is that? And so for the month of May, in Maricopa County, newly built homes were 1,840, accounted for 15.6% of all homes sold. And out-of-state buyers, 2,510, accounted for 21.4% of all homes purchased. If these numbers are accurate, then home builders are not even able to meet the demand from out-of-state buyers. In May, there were only 18 residential foreclosures. We cannot expect any new inventory from foreclosures anytime soon. Institutional investors acquired nearly 5% of homes sold in May, and they are not selling. When they do sell, they tend to sell in bulk to another institutional buyers. So in other words, they go out and they buy 20 homes, they sell those 20 homes to somebody else. As federal forbearance restrictions are lifted, we might see an increase in listings. However, this potential increase in inventory is still unknown. And the commenter here said, I asked the question, who is not selling? My suspicions lie in the baby boomer generation, who reportedly own 50% of the nation's homes. My guess is they're waiting to sell. In Maricopa County, baby boomers might be a double-edged sword. The peak years for baby boomers of 57 to 61, making them 60 to 64 years old. The boomers living here are waiting to sell, and boomers in other parts of the country might want to own a second home or retire here. So iBuyers bought 436 homes in May, and institutional buyers bought 548. These iBuyers are going to turn around and sell them. The institutional buyers are going to make them rentals. Not a big number. I think that there is a chance that when you're looking at that they're buying homes and turning them into rentals, that they are not giving people the opportunity to get into some of the homes in that lower price point, but it's still hard to measure the impact, but I think it's there. I don't think it's major. I agree that people like to beat up on corporations because they just think it's just doggone not fair. But let's take a look at what's going on in the number of price changes per week right now. Check this out. These are price reductions. Look at that line going up. That line is going up because people have decided that they may be asking too much for that home. So remember I told you the people that are shooting for the moon? So they're pricing their homes too high and then they're going, well, that didn't work. So let's go back and see what's happening in certain parts of the valley. This is the Cromford Market Index, and this index is, I've always said it's proprietary number by the Cromford report, and it tracks sales and listings and velocity. And if you look at Anthem and you look at their trend, they were up here way over an index of, look at this, 843. That's astronomical. But now they've dropped in half down to 400. Anything around 100 is considered a balanced market between buyers and sellers. But at this rate, at the rate that they're going down, in a month and a half, Anthem might see a balanced market. Now, these numbers can change all the time, but that's really jumps out at me. So let's look at another one, that Gilbert. Gilbert, look at the trajectory here going down. They had a peak of 762. And I remember when we're in the 300s, when we were heading back up here, like here, coming up, we were all shocked, but we're coming down at a pretty good clip in Gilbert. That could put us, if we were to draw a straight line down here, by September. And you've heard me mention September before, saying that September's lining up to be very improved for buyers. You're going to see the appraisal contingencies get flicked off the desk. You're still going to see some multiple offers, but I don't think you're going to see the silliness that we've been in. Now, if I go to another one that really jumped out, and that's Levine. Levine is plummeting. They're down at less than 250. They're going to be in a balanced market in probably 30 days if this continues. So these are the indicators that are showing you what's going on. That's not a crash, but it's, I think there's another standout here that was Fountain Hills. Let's see what that looked like. Fountain Hills is showing a big dip down, and they could be down, I predict, between October and November. But again, you know, charts go up, charts go down. So it's going to be interesting to see if that changes. So one of the things that I think we need to look at is if people are pricing too high, you know the home's not going to sell. I think the people that are overbidding for homes are done. That group of people that are coming out and driving the prices up are probably finished now. And now the normal home buyer that just wants to go out and get into something, sitting back and waiting for things to happen. And so I took a look here and I said, well, what if we just start looking at listings? And I picked Chandler here again just because it's an easy market to track. And look at agent days on market. Look at this, 250, 240, 68, 67, 63, 48. That's a $2 million home, so that's pretty typical. But you've got one here. Let's go down to, oh, that's 450,000, 599, 545. These are a little bit in the high end. Here's 459.9. It's a status change. It's been on the market 33 days. What this tells you is that you can get into one of those homes now. They've been on the market for over a month. Homes were selling in 1 or 2 days. So they've been only on the market for over a month. If you want it, go out and make them an offer that's less than their list price, and you might get it because they've priced way too high. They shot for the moon. And some of these are on the market and they've come on and they have fallen off. And it's an opportunity, and this is going to increase. Because you might recall me saying that sellers, it's going to be a while before they figure out just how much the market's softening up. At first, the first level, it's going to be the real estate agent's fault. You didn't get my house sold. And then they're going to realize that things are starting to soften up, but they still think they're priced okay, and they're going to be in denial. And then reality is going to hit, and they're going to start lowering their price. This doesn't mean that the price of real estate is declining in Arizona. What it means is that people that had lofty expectations are sooner or later going to hit reality, and they're bringing their prices down. So the market's going up over 20%, but they priced theirs at 30%, they're going to start feeling it now, and that's going to bother them, and they're going to have to price down in order to get a buyer. Patrick says, what does Maricopa look like on the chart? Well, let's pull this up and see what it shows us here. Let me get them over there and take a look. Maricopa, we have, there it is. They're coming down, but not like everybody else. So they are sitting at a comfort index of 331. And if I were to draw the straight line, I think I would put them out again to about November and December. Overall, I think November, December is when generally in the valley, if things remain the way they are now, we will see a balanced market. When I track that 7-day moving average, we are consistently seeing 500 more homes come on the market than are going under contract. And if you just do simple math on that, again, it takes you out and tells you that November and December are going to start getting quite normal and easy for people to write offers. So maybe this nightmare is going to be over soon. There is plenty of stuff going on that shows that this market is still strong. And here's a slide that says, is it a good time to buy? And so from 2005 to 2006, comparing to then, projected market shift, seller market to buyer market, and prices dropped. Now, seller market to balance market, prices rise at inflation annually. Units versus population, we were overbuilt for 10 years back in 2005. Now we're underbuilt for 10 years. We don't have enough homes. Interest rates were low adjustable rates. Now they are low fixed rates. These were the teaser rates they had, and this is why everything fell apart. Some people had interest-only loans, 1%, but the prevailing rate was 7%. So when that loan reset, you're paying 7%, you can't afford it, you're out. Lending practices, very loose, high risk of foreclosure. Stated income loan, can you get a stated income loan now? Hi, I'm Rick, I make $100,000. No. Today, very conservative, low risk for foreclosure. And don't believe the hype that tells you that lending practices are getting stricter. They actually aren't, they're loosening up a little bit. Affordability, only 27% could afford a home, and our affordability index now is 63%. It's a normal range. The problem isn't so much affordability as it is all the nonsense of overbuilding and competing with cash builders and buyers and putting in appraisal gaps. That's the real issue for people getting a house right now. Back in 2005 and 6, it was cheaper to rent, and it is not now. It's cheaper to buy. Economic growth was all real estate and tourism based. And I used to talk about real estate in 2006 and say it's not a perpetual motion machine. You know, there's a lot of construction. Yeah, but nobody's moving into them. And construction can't feed and fuel construction. We have to have people moving here. We have to have jobs so that we can justify all this construction. Now, diversified industries and growing. So we have a much better economic base right now. Annual median income was stagnant in 2005 and 6, and today it's growing. Jacqueline, I got that off the, do you have Crawford Report? I got that off one of their presentations. But if you want, I can send you the whole thing. I'll be happy to send that to you. The difference when you look at wages right now, there's a lot of wage pressures. We talked to Sam DeGreen yesterday, and he said that's the thing to watch right now. The inflation number looks like it's just a temporary blip because of supply side issues, but there's a lot of pressure on wages. In some places, they offer you a bonus just to interview. So they're paying you to come in. There's really a shortage in fast food places. Oh, Jack, you got a subscription. Yeah, go to... go into Crawford Report and go to presentations. You'll find that in there. It says July. So wage pressure is really going to start happening. I know I have friends in the baking industry in Los Angeles, and they said they can't even staff their bakery. He said they can go to McDonald's for $25 an hour versus working in a hot bakery all day. And they're having a hard time getting people to come back to work. The other thing that happened was people decided to retire early, and they bugged out. So they said, you know, I'm going to I was thinking about retiring in 5 years. I think I'll bug out now. So it's tough out there. It's tough to get people to come back to work. And we have a lot of diversified industries out here right now in Arizona and plenty of work. We just don't know where to put them. So it's tough times out there. We're going to keep watching these numbers. Tune in every morning at 8:30 where I go live. And in the meantime, have a terrific Tuesday. It's 46% humidity out there today. I don't know how you people live in Florida can do it. I can barely get through the day. But I'm going to make it through this one. Have a good one and go Suns. It's do or die tonight. Take care.